Seen it. Recording what exactly? My dulcet tones? You planning to sell them on some dodgy black market or what?
You're actually crazy, nigga.
Oi, don't start with that nonsense. Calling me crazy doesn't make you sound clever. What's your point, huh?
It's that. Now let me get back to work, okay? I will see you soon, Mr. Kisogo. Okay, so guys, welcome back. And so on the last, I think on my, I mean, like it was this week post, and there was a case. I asked a question like, which topic should I cover on the lessons which we're going to have? And yeah, sure. Somebody said I should do maybe more on intraday trades. I won't talk about, first of all, wait a minute. Let me share with you something here. Let me show you something. I think this should be where. Give it a minute. Okay. Not this. I'm not going to drop this on YouTube, man. This is for the master class. Wait, I want to open a tab here. Okay. Now maybe I should add a new one. New board. Wait now. So let's talk about something here. And now, based on intraday trading, what is this again? Okay, maybe I should put maybe 64. Okay. Now, maybe she call intraday. Intraday trading secrets. So for you to be a good intraday trader, you are going to be either a scalper or an intraday trader as it is. Okay. So when it comes to intraday trading, things which affect your trading efficiency on the market is things like news reports, okay, and the kind of methodology you are using. Also, your efficiency to your trading methodology. So the first thing when it comes to intraday trading, which you have to know, like when you want to be an intraday trader, is the methodology you are using. Methodology. Okay. So the kind of methodology you are using is going to have a lot of impact to your trading style. Okay, so let's say if some people use ICT, others use supply and demand, others use indicators. Whatever the case you are using, the efficiency of which strategy differ because that depends on how much the strategy giving you as a risk, also how much the strategy is based on. If the strategy is based on liquidity, or okay, maybe liquidity, maybe all strategies are based on liquidity, but most of them are not that well established to understand the basis of liquidity. Okay, so like when you are maybe if you are using SCT, you know, the order blocks, the Fibonacci, the what we call he called what? No. No, you know the ICT indicator, the Fibonacci uses, it's called the optimal trade entry, right? Okay. Also, you have the silver bullet in ICT. Also, so those are some of them. Then you have supply and demand. You have Wyckoffs. Okay, there are a lot of methodologies that are indicators. So the way which is so efficient in trading when you want to be an intraday trader is trading based on liquidity. As the traders, we don't focus on lies like supply and demand. The market is not controlled by supply or demand. The market is controlled by algorithms which engineer liquidities in the market. And so like when before the news pops out, it's already have been known to the elite, to the dogs of the market. Like before the Federal Reserve Powell talks about the Fed fund rate, it's already have been induced to the market. And the market, regardless of what, the market will always follow the market structure. So that's why you want always news reports are going to follow the market structure. Okay. And there is no any other way. The market should go around and try to behave like the news and did what and such. Okay. Always the market is going to follow the price action. It's not going to follow what your news said. Okay. The news is just a manipulation. Listen to this. Okay. News are not real. What's real is price action. If you are wrong on liquidity, then you are going to be taken out by news reports, or you are going to be on the wrong side of liquidity, which is going to be grabbed, okay, to be liquidated. So that's first thing. So if your methodology have no efficiency in trading news, there is a problem because it's not based on liquidity. Now, that's why it's so hard for you to trade the news because you don't understand the liquidity, how liquidity is being engineered or being created. So that's the first thing. But when you are a scalper, that you have an advantage because you will take trades based on 1 hour, 15 minutes, 1 hour, 15 minutes, 15 minutes, 5 minutes, 1 minute. Those are your trades. Okay. So the other thing after mastering your methodology, when you want to be an intraday trader, is you have to know, you have like to understand what's going to be your trading goals. Okay. Your trading goals. So you are an intraday trader, but what's your trading goal actually in intraday trading? Like how much you want to make in a day? How are you going to take your profits? At what time are you going to achieve a certain goal, like to grow your capital from this amount to that amount by this time? Okay, with a consistent plan. Okay, so you must have goals or dreams, or you have to see the trader you are going to become before you are actually doing the stuff, so that like you may have the mind map to show you where are you going with your intraday trading stuff and where it's taking you. So you should always analyze and try to check and refine your goals based on the strategy you are using. If you're a scalper, should analyze how much you are spending even time on scalping, because you have to have time in life. Also, the other thing is you have, before you become actually, when you are intraday trader, you have to understand one thing about volatility. So volatility is just like the ticket of the market. So now you're having the methodology, and wait. Okay, having methodology, you're having volatility. No, you're having goals. Okay, then you're having volatility. You're having goals, you're having volatility. Then what you have next is on volatility. So now you have to know if you're an intraday trader based on your methodology. So methodology is going to affect a lot of things in your trading life and trading style, because like it's going to affect when you trade and how you trade. Okay. So basically, if you're having a weak methodology, then you're going to have troubles dealing with this matter. Okay. So it's going to be kind of hard for you to just trade. Okay. Yeah, because there is no way you want to tell me that your methodology is going to work so much efficient to not be affected with volatility. So like when you're trading ICT, what I know is these people trade during Asian session. But now the problem with Asian session, the market is so slow, very cold. Like you may have some moves there in gold. But in Asia sessions, the market where it becomes choppy, huge spreads. You can't actually do trading in Asian sessions. Okay, like the spreads are too way big. Okay, so most of people like to trade during London session and the New York session. So you better pick the two. If you don't have trades in London, you wait for them in New York. So those are based on methodologies. But when it comes to volatility, what I actually do most of the time, I don't consider New York session what, because the strategy is not based on the issue of volatility, based on liquidity. So wherever the market creates liquidity, I'm going to enter, regardless if it's an Asian session or what. But what I'm going to control is the risk. So basically, I'm not kind of type of intraday traders or scalper. I intraday trade, I can scalp, but I like to position trade and swing. Okay, so most of the times the trades I take are for swinging. Okay, so that is what you need to know. The volatility is going to affect your trading, because it's going to affect you to be affected with trading methodology. The other thing is you have to trade few pairs. Few pairs, maybe 7, 2, 4, 3. Maybe you can trade gold, Bitcoin. Maybe you can trade US oil. Maybe you can trade EU, maybe GU, GJ, UJ. Whatever you trade, the thing is, trading few pairs is going to give you more focus and more clarity on understanding what's going on with the pair. But when you are being bombarded with a lot of pair, like you have these 100 pairs on your trading view, now you are going to not have much focus on the pair. So the less pairs, the more effective you are, the more less losses you are going to take. Okay, the more few trades, the more losses and the more profit. So the other thing which you have to consider after understanding is that you have to always be based on, should put this in capital right, have to be based on price action, not indicators. Why? Because price action is the liquidity. You have to trade the strategy which is based on liquidity, which is not based on indicators. So most of the times you make indicators do not show, indicators kind of like show the wrong stuff at the wrong stuff. Okay, like it's showing a buy on a selling area. You know, maybe sometimes they came late to show you the entry. Okay, but using indicators, it's for people who don't actually understand how to trade. Okay, you should just use an indicator, maybe like a confluence to a already established trading strategy based on price action, but not indicators using indicators as a strategy. Okay, these are going to be giving you a lot of trouble. So that's another thing. So if you are using indicators and you are an intraday trader, then you have to be very careful, because you will be entering in points which you are not supposed to enter on those trades. Okay, like the indicators do deceive a lot, and that's another point. So the other point is keep risk management. Risk management. So when you enter day trader, you have to keep your risk very low. Okay, but the problem with intraday trading is this: you are risking, let's say you are risking 1% or 2.5%, or somewhere in the range. The problem is when you are risking 1% or 2%, and the price moves 100 pips, let's say it's EU, Euro USD, it moves maybe in a day, it may move even 50 pips, that's maximum. And GU, maximum 50 pips, 70. Okay, now 70, it may take days. Now you are not just an intraday trader, you are now a swing trader. Okay, so for you to be an intraday trader, what you have to do is you have to keep your risk very low, because you are not swinging. Because if you are having like a 2% or 1:4, meaning that if you lose 4 trades, you are going to lose all the profit which you did make on the trade. But when you are like a swing trader, you may lose that 2% and make 1:17. Okay, 1:10. So it means it's going to take you 10 trades for you to lose the same amount of money which you were supposed to lose. You were supposed to lose like your capital. Okay, but the problem with intraday trading is that it's giving you trades, but the risk to profit ratio, they are not so good. Okay, that's the problem with intraday trading, and I don't like it for that, because it's going to keep you on this cycle of making profits. So you have to be very quick at putting your break even when you enter day trader. Okay, so why? Because the market have to, if it makes a pullback, it have to take you out at a break even, not a loss. Because if you're an intraday trader, you have to understand that it's so hard for you to push to cover those losses in a day, on a daily basis. So you have to be very quick at putting your break even, adjusting your stop loss. Okay, you have to be also very good at taking your profits. You have to not be a greedy fish. So when you are so much greedy, you'll be left in the market a lot of pips. You have to be fixed about your taking profits, fixed about your entries. The market doesn't do, you don't do. No action, no action. Okay, the market always respects people who follow risk management and who do their trade management very well. So like here, I may put risk management and trade management. Trade management is basically how you are controlling your trades while you are trading. Okay, like how you are controlling your trades, like how you are adjusting your stop losses, how you are putting break even, how are you going to take partials, how are you going to close all your profits and whatever. So that's all falls into this point right there. And the other thing is you have to always know before I move, you have to make, if you get losses, you have to cut your losses low. Okay, you have to cut your losses low. Few pairs, if you're having more pairs and your risk management is not going to be so good, because it's going to take you a lot of time to recover, because the risk to reward ratio is not very huge in intraday trading. So now here falls the other problem, which most of intraday trader counter, is over leveraging. Over leveraging. So people get into the market and become so greedy, greedy more than these dogs, man. And or they don't want to learn, they just want to take money from the market. Okay, so and the market is not that bad at teaching people that they have to learn. Okay, they have to learn. Now when you are over leveraging, okay, if the market stops you out, then you're going to be in trouble. Why? Because actually the best way to lose your capital is trying to grow it fast. Because what the bad stuff about over leveraging is that you are skipping to learn the necessary skills which you are required to learn as a trader. It's like having wealth from inheritance. So you are skipping, if you were like a boy in your family and you get the wealth from family inheritance, it means that you are not going to learn all the necessary skills which are required by you to build the wealth. Now you have all this wealth and now you don't know how to do with it because you have no skills. And towards that, and now that point enters here into over average, adding more position to a losing position, like you were in a loss and then you are adding another entry to a losing trade. Why are you adding even to a trade which is already led? Okay. So the issue of over averaging is not good when you enter the trader because your risk reward ratio is so small. Risk reward ratio affects your intraday trading. This is a secret, guys. People don't tell you, but this is a reality. That's why if I'm being asked what the best kind of trading for me, man, I will tell you, being a swing trader based on my methodology I use. Okay, like I can buy and know a point to sell and still hold my buying trade, and I know how to take the partials. Most of the time I don't take partials. If I take partials, I close 90% of the trade, I left 10%. Okay. And I just understand very, very deeply how the market moves. I understand very deeply and very efficiently how the market moves. And the other thing so far, you have to stay away from over-leveraging. Allow yourself to grow, and as you grow, you will get time to change your lot size. There is no getting, there's no locket which is going to allocate for what? Getting rich quick. There is no getting rich quick. Get rich slow, but be consistent, be disciplined. That's all. And the other thing is follow your trading plan. So now, what's your trading plan? So basically, are you an aggressive trader? Are you a normal trader? So if you're an intraday trader, don't suppose you become an aggressive kind of trader, because if you are being aggressive now, so I have two plans in my trading. Okay, I have the aggressive plan and the normal trading plan, which I use for normal trading, for the normal trading account which made me here. And I have this aggressive plan which I enter with massive lot sizes. Okay, so you have to have the plan A and the plan B. So like when I'm normal trading, I'm trading normally. I'm just going to follow the normal trading plan. So you have to be strict with your trading plan, how you are entering, how you are exiting, how you are taking profits, how what. You have to follow your trading plan. The must rules, you must have must rules, like you don't break those rules, whatever the case. Okay? If like, let's say in a buying trade, you are not going to buy if you don't see that. It's a must. You have to see it for you to believe it and to exit the trade. Without that, you are not going to enter on any kind of trade. Do you understand what I'm telling you? You have to be focused on being on the, you have to focus on performance, guys. Focus on the performance which you are going to get from following your trading plan. Don't focus on seeing, on executing trades. Focus on being disciplined. How are you being disciplined? You are going to be disciplined by following your trading plan. How are you going to follow your trading plan? You are going to follow your trading plan if you are training your brain to just be based on performance, to perform. You are going to the market to perform. If the market doesn't show you anything you want in a buying trade or a selling trade, you don't perform, you stop. So you always observe your performance and reduce mistakes. Another point, reduce mistakes. Now, this one's a huge point. So like you find a guy, he like uses order blocks, okay? Order blocks. Now, he uses order blocks and maybe I'm not an ICT trader, guys. I don't trade ICT. I don't trade supply and demand. I just trade the locket strategy. Why is the locket? Because it takes you to the moon. You know what I'm saying? And yeah, I am the creator of the strategy. So how are you going to reduce your mistakes if you don't know your mistakes? If you are repeating the same old mistake, you have to learn from your mistakes. How are you going to learn from your mistake? Through backtesting and reviewing your trades, the trades which you took. Now, this will create you to be a better intraday trader. Do you understand what I'm trying to say? Do you get what I'm saying? Okay, so now that's another point. The other point is you have now, let me just drop another point, I think. Okay. The point is stay disciplined. Stay disciplined. So like the problem with not staying disciplined is that people trade and over leverage like those mistakes, do those mistakes and repeat them, and they find themselves like they are not disciplined and such. So how are you going to expect something to change if you don't change? You keep repeating the old mistake. You're not disciplined in following your trading plan. Okay, remember guys, even by trading few pairs, like the professionals don't scatter, just they don't go in a forest. Like if you're a hunter, you go and you hunt. You look for a very detailed and a specific prey. Okay, you focus on that prey. Have you ever seen a lion? Like in a in a forest, like in with buffaloes. It goes and it kind of mixes itself, but at the time just looking for the easy prey. So now when you are doing your analysis, you have to focus on pairs which give you an easy best setup. If you're not looking for, after you have done your analysis, you have to analyze also the pairs which give you the best setup. Okay, so you must have the rules before you enter in your trades, what to have to analyze, what to have to refine before now you're going to execute. So that's going to give you an edge if you stay disciplined. Okay, so now let me show you. Now, these are the intraday trading secrets. Now, let me show you like how we, no. I'm not going to do this. Okay, but basically these are the fundamentals which people don't talk about. But if you have a clear goals, if your strategy is not based on volatility, but it is based on liquidity, now I should adjust this point. I should adjust. Volatility based on liquidity. Not sessions. Listen, guys, volatility is not based on to trade based volatility based on liquidity, not sessions. Wherever you see the trade which was on liquidity, you trade it regardless of the, like yesterday we had this sell from Nasdaq, okay, and few pairs. So like me myself, I trade a lot of pairs, guys. I trade a lot of pairs. I trade gold, Bitcoin, JPY. I trade US oil. I trade gold. I trade few times. I trade silver. Also, I trade GBP NZD, GBP AUD, Euro AUD, maybe Euro NZD, and JPYs. I trade USD CHF, USD CAD. Okay, I trade also indices, US 30, Nasdaq, S&P 500, Japan 225, okay, German 40, German 30. I do take them more trades on those pairs. And I find myself like in a day, I'm having a lot of trades, right? Like in every day, I have an entry, more than two trades. So now you have to regulate the amount of loss you are going to take in a day. Like, 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 I have this maximum amount of risk which I'm taking on. Excuse me, guys, I'm having a phone call, so let us pause. Hello? 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 Okay, let's proceed. Okay, let's proceed. Okay, so now I'll just share the chat to show you something here. Okay, let me share the chat. Okay, hide, boom, bam, bam. Okay, so okay, remove takataka. So guys, this week we had a trade, buying trade. So I think everybody knows. Everybody knows. So we are at this point, but should I expose this? I don't think so. So basically we had a trade here. We had a trade here and we had another trade here, but didn't take this one, but we had a trade at this point. Okay. But let me show you. Actually, we did have an entry at this point. Okay, now I'm not going to talk about that, but I'll try talking about this one. So the market made a high here and then it shifted on 15 minutes. But now back to the daily now. So we observe that we're having, oh no, I'm not going to talk about this. I'm just going to show. Okay, so when you look here in the 15 minutes, okay, on the 15 minutes, the market made a shift, okay? And after observing, we found that the market also shifted on 15 minutes, actual here, and gave us a market shift, okay? So when you go back to 1 hour, I will explain just, I won't explain the concept. You see there is something which was here, which was like an impure or an incomplete liquidation, which occurred. So if it's like an incomplete liquidation, means that the market is not going to do a complete liquidation also. It's going to proceed to do an incomplete liquidation, okay? And if it's going to do an incomplete liquidation, then the issue is going to be relying okay. No, I will not talk about that. Now go to the 15 minute. Okay, actually the market made an incomplete liquidation. So people are kind of were anticipating to have these trades, their trades on these liquidity engineerings down there. Okay, now that was a lie. Okay, so now the market came. Most of people, my people in my class, were anticipating like to have this kind of selling trade at this point. Yeah, which was not. Why? Because the market, if it's not going to do a complete liquidation, then what's going to do? It's also going to do incomplete. So that's why the market gave a sell at this point, which was a liquidity free. As you know, if it's incomplete there, then it's going to not do a complete. So here the market came and reacted. So I was in a sell at this point. At this point, let me show you. I think most of you, I don't think if there's a lot of people who took this trade. Most of them didn't. Now let me go to one. Know what I'm saying? So whatever you did, where you did take your entry, you can take your entry based on this. Okay, whatever. This is the point where you're supposed to, but the one which was fresh was that one. Okay, so now not this, but this one. Now you have to always consider, okay, because it's not very necessary the market going to come up there. Okay, so now let us, okay, now if you look here, now let me show you. I always take 25 pips on gold. So like when I'm in a trade here, 25 pips is where that's my 2.2 I take 2.5% of my equity, my balance, not my equity. Okay, so now we're having something like this. But when you observe here, I'll put it to 5. When you look here at 5, at the 5-minute time frame, you observe that this was the flip, okay? And it was tested. And this was the what? My people know, my students, my mentees know. I've talked about this topic most of the time on flips. So this was the point because let me just tell you, this is called engineered liquidity. What's engineered liquidity? Engineered liquidity is a liquidity which is being engineered as an area of liquidity next at a flip or a liquidity engineering. So basically liquidity engineering, normal liquidity engineering, those liquidity engineering and flips are basically all of them are liquidity engineering. So whenever you see a liquidity engineering and an area of liquidity, that's engineered liquidity, simple. And your stop loss is supposed to be a few pips above the engineered liquidity. Why? Because the market is going to may even try to liquidate this as a whole. Okay. So based on Freeport, you observe the momentum. See? So people anticipate to take this trade on liquidity engineering, didn't know what was here. So that was a mistake. Okay. Wait. Now, wait. Now, after having this sell, our take profit was supposed to be where? Was supposed to be here. Just that this low is enough. Okay. Why? Because the market is not going to break. This free was supposed to send the price back where it came from. But remember, guys, we also have this market shift at this point, right there. Okay. At the 15 minutes. So now, basically, when the market was coming down, it was coming to liquidate this formation, make a what? A buy. But the lowest point was this one. So actually, we didn't have any market shift. But now, after the market reached your take profit as you scalped this one, we are supposed to buy. Now, the issue is you have to, when the market now was going up, it came here, okay? Then you are supposed to consider the entry on the 5 minute. Now, my students understand why in the masterclass, but the entry here was taken on 1 minute, and I did enter like late, like 1 minute, because I didn't trigger an alarm. I didn't put an alarm. No, I was distracted. I think I was on my phone. And so having this, you can see that's your entry. Okay. That's your entry, no doubts. Then if the market is going to make like those huge drops, it's going to end at this point. Now, guys, I'm showing you guys something which I think your mentors have not told you yet. This was your engineered liquidity part, okay? So now let's play the price. See? So first the market reacted, then came to the engineered liquidity portion and moved. So how many pips? Wait a minute. From here to there, 20 pips, 24. Okay, 24 pips, nearly being knocked out, but I didn't enter. I did take the entry here. At that point, boom, 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 and the market moved. This was my entry point. Now I didn't take the trade here because I was late. Told you, I entered here. And that's it. This big boy moved, started buying. Now, the purpose of buying here, as we have an incomplete, so the market is going to supposed to take the complete liquidation. Now, if you look here, my people know when they check the weekly, you know where you are supposed to get out. Okay, you know where you're supposed to. I won't show this, but basically, for any of you in YouTube, this was your take profit. Okay, yeah, that was your take profit. So the market, this is your take profit. Put it in a blue. That's as your take profit now. See, market even made a pullback. So how many pips from there? 1,000 pips. Okay, 1,000 pips. So that's what you love about gold. And after the market moved like this, now we have established a market shift, isn't it? We're having this lowest point, we're having this area of liquidity, and this one. So this was also an incomplete, so the market have to continue to go to complete the liquidation. So it's not going to liquidate this whole. Now the market moved and it's currently selling. Okay. So now here is the market right now. Here is the market. So actually we got a sell at this point. Actually, not everyone knows how to refine these entries. Now check. When you are refining, let me help you guys. When you are refining, like you find the market have two kind of, no, should I tell you this? Okay, the entry was supposed to be based on this point right here. Not here. You're supposed to take the trade based on those 2 points, but you have to use the first one first. Okay, based on this first liquidity engineering, why it having this engineered liquidity also. So now this was the entry, and the market spiked down from that point, and it was a good sell until where it is now. You have also this entry, which was here in 5 minutes. If you go there, you will find this. Just by looking, you can see the trade, which the entry was this one. That was your entry. And you may go even to 1 minute trying to check, but not something good. You can see if you were in this, you can your entry should be here using the 1 minute. Got it? So now that was your entry. How many pips did it give a drawdown? 4 pips. Okay. So now we are at this point and we're expecting the market to create even a more low. So we may we may have a pullback because we are anticipating the market to actually give us a shift because it's already liquidated the 15-minute area of liquidity. But now the problem which is rising is that we haven't finished the business at this point right there. So it may come all the way there, and like when I say unfinished the business, let me move this here. This is the liquidity. So if the market fails to come over here, it's just going to break this structure and continue making a sale. Okay, so that's it. Also, we have a trade. I think it was in the USD. The move. So check the daily. I won't explain why and what and whys. So the market actually came all the way down here, but my people know why. We are going to take the trade. And the only thing which was making us take the trade, let me go. Sorry, let me cut. Okay, so basically we have this inside formation. Okay, now we're having this strong momentum, so you have to observe for flips. But when you do, have to mark your formation, guys, is from here to there. Okay, now go to 15 minutes, try and do refinements. When you look at the time frame, what you observe is you're having this liquidity flip, okay, and the other person may take the trade at weird point at this one. So basically, those are the 2 points which you have to take the trade, and you have this engineered liquidity here. So you may expect a little bit of a kind of drawdown. And now when the market was coming down, so we are bullish on this pair. We are bullish short term. Yeah, your long term. We are bullish now. That was your entry until there. Okay. So basically, just have to regulate the amount of. No, I'm not going to tell you guys this how to regulate this. Now that's it. And the other factor which we have, another pair which we did take a trade, I think was this one, NASDAQ. So yesterday took a sell at this point. Okay, now we are learning Check in 15 minutes, got a shift. Perfect. Okay. Now time to take re-entries. If we're going to take your trade, you have to take your trade where? Here. On this. Okay. You have to understand why I'm saying that, because if the market is going to come to not shift, if okay, it's have not shifted, but it's now it's going to shift. If a pullback happens, it's going to, okay, you are going to use just this one formation. Now check on one how to confirm that. Yeah, you're going okay. If just one, how it's going to use that just one formation. If it's going to be this one only, no, not created another formations here. Okay, this is a trade we own. Okay, another pair which I think it was this one. It was by a flip. So basically, know what I'm saying now. Just basically simple intraday trades now. In this pair, we're going until we're coming to read. That's our take a profit, take a profit one, take a profit two. And the thing is, okay, after this, we are in a long sell. We are bearish. Okay. Now, what happens here is this. Now, after being liquidated here, the market moved and made this impure, then came back, made this impure for continuation of the what? Of the buyers. So my people understand why is that? So basically, I don't know. There are many times I see the other people saying impure, but I have my kind of like I call it impure for my own terms. So it's some word which I've come around to see that there are traders also use the word impure. So it's not a problem. I don't know how they use the impure, but I don't know. Maybe it's just a name they are. Why I call it impure for liquidation purposes. Okay. Now, when you look here, you can observe with your clean, sharp eyes that you're having this one as your entry point. Okay. And you have this one. Whatever you pick, since we have this engineered liquidity, whatever you pick, that's your entry. Now, listing on this pair is 15 pips. So how many? 11, 15, like there. So you are listing 15 pips to make about uh, how many? 100. Like that 1 ratio. Up to here is 1 ratio 10. Because yeah, maybe 1 ratio 15, maybe 1 ratio 13, whatever. But that's the ratio which you are supposing to take when you are doing an intraday trade. So now most of people like trade like this. Now let me show you. Some of the intraday traders, they call themselves, I'm intraday trading. I'm intraday trading. Okay, let me show you. Now, boom, 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 shakalaka. I won't tell you why. So someone may take the trade here, and because in the intraday trading is first take a profit, second take a profit, and the last take a profit at this point. Man, if you are trading like this, okay, if you are trading like this, you don't know what you are doing. You don't understand how to trade, okay? So now from here, now you ain't doing this like you're an intraday trader, okay? From here to here, 15, 1 ratio 4, 1 ratio. Now let's say here you have taken partial 50%. Now you are like 1 ratio 2. You are going to end up to here like in 1 ratio 4. Okay? Instead of like 1 ratio 4 or 1 ratio 3. Now you see the problem? You see the problem there? Okay. Instead of just going to take this trade all the way there to finish the process. So this was one among the trades which happened, and maybe we have some trade in Bitcoin. Yeah, sure. Why not? So basically, we are in a sell, and where am I anticipating to take my trades out? I'm anticipating to take a buy at this point, but I will see. Okay, I will see. I'm anticipating to take a buy at this point. My people know why we have taken the trade based on this formation. My people understand the logic behind, and we are going to take the trade on this formation. So like I actually most of the 90% of the time know which formation is going to take the trade. I know people don't understand which formations to use. If you are one of those kind of traders which don't understand which formation to choose or to trade or an area of liquidity to trade, just come for the mentorship. Okay, I'll be having a mentorship program this September, and great, check the DM. So if you see this video, just come straight up because I'm just going to close the window. I'm going to do this like I think it will be my last mentorship intake. Okay, so don't expect the price to be that dump because I'm not going to tell you all these things. So now we are having a buying trade, okay, on Bitcoin. Now let us screen the mess. Now, boys should get the pounds. So you're having this market shift and we're having this buying trade. Okay, my people understand why we took the trade on that. So now just basically go to 1 minute. I want to explain the logics behind pullbacks until the market came to the last liquidity. Okay, so look here, watch closely. Okay, the market came from what? You know what I'm saying? And we're having that's your entry. That should be your entry point, and that's it. Put back 15 minutes, wait for the market to come to tap that trade. Greedy is going to cost you a lot of things so that we need this trade. And now check the daily. So after this day close, there's something happened, okay? We're having this day gap. So it's anticipating to get this pullback was necessary. Why? We're having this another daily flip. You guys are not so careful with your eyes. Train your eyes to see. See that? And where? On this and this. Okay. Want to explain further? So we are having this buy and you are supposed to get out nearly at this line. Okay. So I was out after seeing that. I won't tell you what. But that was 300 pips. Simple. I think it's more than 300, guys. This is like 3,000 pips. Okay, 300 pips, correct. For now, that's it. If I see any sign of, I'll be out of the trade. Now we're having highest point, we're having the shift point, and we're having this 1 hour liquidation at this point. Simply to tell you that if you are holding a trade here, you are going to be block swept. Why? I even expect furthermore from this trade, like it may even go all the way down there. So like I'm in a trade, but something which confirms it have not reached out, take a profit. So my people understand if they look there to the left side, they know what I'm saying. And we have not basically reached our take a profit. I won't tell you the take profit. That's it for your trade and you are done. You are supposed to get out of this point as an intraday trader right there. Done, deal done, out of the trade, waiting for sell opportunity. You have a sell. A sell one. Where is your take a profit? Your first take a profit should be here. As an intraday trader, simple. You're out. Now, after that, I think we're having enough session. So see you next time, guys. Okay. Yep. Man, okay, so I will see you next time.